Welcome back. You're watching In Your Interest. I'm Shweta Kothari. In what could bring relief to consumers, petrol and diesel prices may soon see a reduction if global oil prices continue to stay low. Oil Secretary Pankaj Jain indicated that state-run fuel companies are likely to consider slashing fuel prices provided crude oil rates remain depressed for an extended period of time. Now, this comes as India seeks to ramp up crude purchases from cost-effective suppliers like Russia, while also pushing for increased output from OPEC countries. Currently, oil prices have dipped to near 3 years lows, enhancing the profitability of fuel marketing companies. On Tuesday, Brent crude oil fell below $70 per barrel for the first time since December of 2021, sparking hope for a reduction in pump prices. The drop is attributed to concerns over a slowdown in global economic growth, which is weighing in on energy demand. Now, state-run fuel retailers who control about 90% of India's fuel market are now enjoying favorable marketing margins due to the lower global prices. If the trend persists, a price cut at pumps could be on the horizon for Indian consumers. Meanwhile, on the domestic front, crude oil prices edged up on Thursday. Crude oil futures for October delivery rose by 51 to 5,709 per barrel on the multi-commodity exchange as traders widened their position on the back of strong spot demand. Globally, oil prices also ticked up, with West Texas Intermediate crude climbing to $1.268.16 per barrel, which is about 1.26%, and Brent crude gaining 1.32% in New York. Now, Mitali Nikore continues to be with us on the show. Mitali, from what we are picking up and what Oil Secretary is saying, there is a possibility of a petrol or diesel rate cut. Do you think oil marketing companies are likely to pass on that benefit of extended lower global crude oil prices to consumers anytime soon?
Absolutely, Shweta. I think this is very much on the cards because, again, this links with the broader macroeconomic context in which we are currently situated and operating. What we have observed is that in the April to June quarter, we saw a slowdown in the GDP growth. Now, of course, a lot of it is attributable to the elections, but at the same time, the government realizes that there is a need to create jobs very rapidly and there is a need to boost the growth rates in the overall macroeconomy. Now, oil prices play a massive role in that because they impact the price and the overall inflation rates and they impact the price of nearly every commodity. So when you pass on a rate cut in terms of oil prices to the economy, it's almost the same impact as a rate cut on the interest rate side, on the monetary side. So this can be a massive boost, a fiscal measure in a sense for the economy, and almost like a bonanza for the economy. So I do think that this is on the cards. This has already been announced by the Petroleum Secretary. And I think that each of the state-run companies will have to pass on the benefit to the consumers, and it will really have a, you know, growth effect booster pill shot for the economy in that sense.
Okay, and obviously also likely lower inflationary pressure, despite and apart from making it easier for people to be able to afford petrol and diesel, which climbed to an all-time high in the last couple of months at about 90 to 100 rupees per litre in India at the moment. But what sort of hold does Petroleum Ministry really have? Now, the last slash in price we saw was in March. This was around election time, which is when usually we have seen in the past that petrol and diesel prices are slashed down. What measures and tools can the government really use right now to bring down the prices? Because from what we understand, they can only nudge the state-run refiners to cut down prices, but it's really in their hand. It's in the hands of OMCs.
Of course, it's in the hand of OMCs, but the OMCs are also, at some level, there is an understanding that the OMCs are operating these companies as a public good, as a public service, and they are financed at the end of the day by government, advisors, by government functionaries, not so much by bureaucrats, but by functionaries by way of, and by the appointment of the government of India. So there is a sway that the Petroleum Ministry does have on the
Okay.
OMCs. And at the same time, the OMCs also realize that this will make good business sense, because when you pass on a lower price to the consumers, the amount of sales, the quantum of sales is likely to shoot up, and it will create a virtuous cycle across the economy that will boost macroeconomic demand and boost sales even further. So
Okay.
I think this is
But
more of a
Mitali,
business decision.
right, absolutely. But, since we are short on time, I also want to understand from you what sort of time horizon are you looking at? Because from what I'm reading and from what's coming out is that perhaps OMCs in India are going to be on a wait and watch mode. Because remember, crude oil prices globally were about $90 a barrel in the month of April. They've come down now to $70 a barrel. There is an extended volatility. So our OMC is going to wait because India, imports nearly 87% of its crude oil needs. Should they be waiting for a while before they start passing on, or do they have enough corpus built up by the way of the margins that they have accrued? It's about time to start passing on immediately.
No, I don't think it'll be immediate. There will be some wait and watch, but I don't think the wait and watch period will be too long. I do believe that in the next 2 to 3 weeks, actually, we could hear an announcement on this front. At least maximum 2 to 3 weeks. I don't think they'll wait more than that.
Okay, and before I let you go, I think we all know how geopolitical risks play out on petrol and diesel prices, and they are likely to, maybe disrupt supply chains going forward. Would that mean that global crude oil prices may start inching up in a couple of, days from now?
No, I don't expect global crude oil prices to inch up so fast. I mean, at this point in time, the geopolitical tensions that we're seeing are almost like a permanent fixture of, the global trade and the global economy, and global supply chains are being re-engineered to a great extent. They have been re-engineered, to adapt to the new geopolitical alignments and the situation. So therefore, I do not think, that this situation is going to change much at this point in time. The global prices, I do believe we're entering a new era of greater stability in the next 6 to 10 months.
Nikore, thank you very much for taking time out for joining us on that story. So as per what's coming out of Ministry of Petroleum, there's likely to be a cut in petrol prices in next coming few days. That is, if the global crude oil prices continue to remain lower. But that's all we have in this show. Thank you very much for watching.